So let's get to Kevin Green, who joins me now. And obviously the big focus is what's happening in the oil patch this morning, KG. Talk us through what your read is as far as the reaction we're seeing in markets today.
Well, I think you're seeing a couple of different factors that are taking place here. One, obviously, the U.S. sanctions that were placed on Russian oil companies yesterday was kind of that big first catalyst. You also had the EU now saying that they're going to ban LNG imports from Russia as well. That actually could be a driver for oil, as LNG or just natural gas in general is kind of a byproduct of shale production here in the United States. And then I think you have a mechanical short squeeze taking place where managed money shorts are probably getting squeezed to the upside, unfortunately, for those traders. And you are seeing oil up around 5.3% right now. Now, one thing to just be mindful of, we will get some commentary from OPEC Plus members, and we already heard from Kuwait this morning stating that they're going to be able to provide the supplies necessary in order to offset any disruptions that we might see from the Russian oil flow, sanctions, if you will. And so keep your eye out on this. We have seen, once again, a breakout to the upside going above that 20-day moving average. You're looking at potentially around $63 to $64 is your next major area of resistance. But you are getting maybe some equity bulls that are also getting bulled up on the energy front, not only because of oil, but also because of natural gas. So overall, decent move, especially when it hit a critical area of support of around that $56, $55-ish area if you're looking at WTI.
Yeah, it's interesting what we've heard from OPEC Plus managing to sort of reassure the markets that it can offset some of the supply void coming from Russia, given that we were very much back to this sort of prevailing narrative about a supply glut. And in fact, I heard some commentary this morning, which I just sort of wanted to run by you as far as the price action is concerned, that what we're seeing as far as a 5% jump is actually quite contained when you think about just how much could be coming off the market right now, which maybe speaks to some of the supply concerns out there. I mean, what do you make as far as the reaction we've seen? Is it justified?
I think it is justified. I mean, at the end of the day, you still have a significant amount of oil supply that's on tankers as well. So inventory levels for a lot of the major consumers are actually fairly healthy at this point in time. So we are seeing, once again, I think this is more of a short covering reaction. The sanctions over the long term, Sam, have not really had an impact on Russia. In fact, when we do see these price increases to the upside, that actually is a tailwind for them if they are able to get this shadow fleet or this dark fleet, if you will, to their necessary destinations. Now, let's see what actually happens with India. India is saying that they're going to reduce their oil imports from Russia. India has been a transport hub for some of that sanctioned oil, being able to try to transfer it onto different tankers and then putting it out to, let's say, the European markets or even the U.S. markets for that matter. But right now, once again, a bull trend that you are seeing. I think the supply story is still going to be a little bit of a concern over the long term. And just notice that any type of price adjustment to the upside, especially on supply dynamics and not demand dynamics, usually doesn't sustain itself for too long. So you'd like to see the consumption story actually improve, not only in China, here in the United States, over in the European Union, and that's where you can see sustainable price action for crude oil, as well as some of the other byproducts of crude, diesel, and gasoline.
Yeah, I think it's really fascinating. You raise an interesting point there as well about the reaction coming from the Chinese and the Indians as well, because I've seen this morning that China has been stockpiling a lot of that oil that it's obviously been buying at a discount from places like Russia, whereas India, my understanding, is a lot more sort of geographically, strategically, and also diplomatically diversified, perhaps, in this market. So that's certainly interesting to keep an eye on as far as the dynamics. You mentioned LNG. I've just seen, obviously, as you mentioned too, the Europeans now looking to ban those imports. I'm fascinating about the dynamics of this story, particularly when you hear these headlines heading into the winter. What's your read on all of that?
Yeah, so there's going to be a couple of different crosswinds when you're looking at liquefied natural gas. So if we are going to see Europe actually backing off of Russian LNG imports here, that actually should increase demand from the United States, and we should be able to supply the Europeans. Now, the only headwind that we have there is actually capacity here in the United States. The export facilities, in order for us to really ramp this up, we're really not going to have that capacity in place until probably 2027 or so, which should actually keep prices relatively high high. That'll also keep natural gas prices high here in the United States if you're looking at Henry Hub. On the other side of that, though, you have seen a reduction of importing of LNG from Asia countries, especially when you're looking at China. So there's a little bit of crosswinds that are taking place within this market here. And just unfortunately, we have a constraint when it comes to infrastructure to immediately meet that need for the European markets. But over time, we should be able to do so. And probably by 2030 or so, we'll have overcapacity of LNG export facilities. And that's when we should see those prices coming down. So maybe this is going to be a short-term situation. Obviously, if we do see a ceasefire between Russia and Ukraine, a lot of these policies can reverse. But at least for now, this is positive for the energy front, and especially for these companies in the United States, these LNG companies like Cheniere, or even if you're looking at Venture Global, those are really the two bigger components, or those that can actually export and in scale liquefied natural gas to the European markets right now.
Yeah, whether or not it's a negotiating tactic, it's certainly moving markets this morning. And in fact, if you look at equities, I mean, energy, as far as the sector is concerned, is the outperformer today, up 1.4% on all of this. Kevin, really appreciate your insights on the energy patch this morning. Thank you so much for your time.